Good afternoon, ladies and gentlemen. Once again, welcome back to the Digital Banking Symposium. Today's session on why digital banks win with analytics-driven decisions is presented by gold sponsor FICO, and we'll explore how digital, neobanks, and traditional banks are changing their use of advanced analytics, data, and automated decisioning to bring differentiated customer experiences, enable frictionless customer journeys, and bring innovative offerings to the market. Today, we are joined by Aashish Sharma, Senior Partner and Segment Leader Decision Management, FICO. Ankit Khandelwal, Decision Sciences Segment Leader, APJ, FICO. I will now hand my time over to our esteemed speakers for their presentation.
Digital transformation has been priority for the bank and is probably one of the most searched phrases in the last few years. Hello and welcome to today's webinar. I'm Aashish from FICO and I work for FICO's decision management platform and risk lifecycle solutions. Along with my colleague Ankit, I'll be sharing our experiences and insights on this topic. Now, year 2020 started like any other, where we were meeting face to face, shaking hands, branches were open, shops were open, and basically we were going about our business as usual. When the pandemic started, no one had imagined the length and extent of its impact. But today, 10 months into the year, we have mostly been working from home, virtual meetings, and most importantly, adopted digital like never before. So, what does the future look like? According to the study by JD Power, only 46% of consumers will go back to business as usual. Or, in other words, 54% will adopt new habits. This is an important point. What habit we want our consumers to adopt? Now, before we look at the answer to that question, let's look at some more data. While you are transforming, so are your competitors. And a better service or experience is making consumers switch conveniently. There's a huge percentage of consumers who are trying out different product services, and the risk of attrition is real. The other important reason is how and what kind of experience are we providing to customers? Is it personalized? Now, customer centricity is not a new topic. Organizations have been focusing on this for a while, and yet one finds many unhappy customers. Now, one of the biggest items that problem that has been identified is that consumers are expecting a more personalized promise. So, what went wrong? The challenge is that even though customer centricity is not a new concept, the way it has been adopted and implemented by financial industry has been redefined completely over the last few years. And specifically, if you look at the experience provided by Amazon and Netflix and Facebook, the bar in terms of consumer expectation for delivery of service and product has been raised. At FICO, we look at digital transformation strategy having three key pillars: cloud, analytics, and platform. As for cloud, Jack Ma, the business leader and co-founder of Alibaba Group, famously said, sharing his conversation with one of the Walmart executives, he said that for Walmart to acquire 10,000 more customers requires data warehouse and this and that. For me, two servers. So scaling up does addresses an important part easily. And that's the first point. Ability to scale up quickly and as needed is crucial element of success in your digital strategy. And that's where the cloud adoption is critical. However, scaling up the right experience is the key here, which is where the platform and analytics comes into play. So I'll be focusing today on the platform and decisioning aspect, and Ankit, my colleague, later will cover the analytics behind that. So when it comes to transformation, most leaders and understandably look at MVPs and addressing immediate use cases, but they can be very short-sighted. They might solve today's problem, but rarely do they lay a foundation that can be built upon later. And that's why when you're looking at these transformational journeys, even at the MVP stage, you should be looking at a larger platform, a decision management platform. But what does that mean? So imagine to launch our first MVP requires some models, some rules, policies, some income estimation and capacity models. These are what we call as decision assets in our platform. Having defined them once, they will become part of a larger reusable library of decision assets. Now, when time comes to launch my second use case, a product or a variation or another use case, I may use few of the existing decision assets and define few additional decision assets. So as we add more use cases, more MVPs or launch new product, we will add on to our library of these decision assets, shareable library of decision assets, and very soon we will have sufficient shared assets that to launch a new product will be a matter of weeks, if not days. So think of DMP, the decision management platform, similar to your smartphone. It has an operating system and applications. Apps are easier to build using common developer tools. When app developer leverages the same platform, underlying platform, the apps can share data with a single simple click of a button. And everything I said about a smartphone is also true for DMP. Our platform enables our clients to solve their business challenges with a centralized way of making decisions about their end consumers. And all of the functionality our client need is available on a single, easy to manage platform. The apps, and when we say apps, this is what where the decision assets come together to create an app or a use case. They have they are interoperable, so they work seamlessly, share data right out of box. It is easy to add new apps or new use cases or new solutions at nominal cost. They can customize their use of platform with as many apps as they wish at the pace of your own choosing. In short, with the freshest data, the latest data that we can ingest, you will be making smarter, faster, and more profitable decisions with FICO's centralized decision management platform. Now, the other most important aspect of success in digital is personalization. We'll talk more about it in our analytics, but we should almost be thinking of a segment of one. Our ability to bring all the data and interaction that the customer is sharing with us to give them a unique, personalized experience. And personalization has to be seen via different lenses. So, for example, lens of a customer. Customers selecting the offer the offer that we made to the customer tells us very important information. And so does when they do not choose that offer. Most of us have seen how Amazon Kindle recommends books based on our past reading or purchase history, and it keeps on improving. And that's a very important concept: our ability to learn and continuously improve based on the choice and the interaction that the customer is having with us. The second way to look at it is, or the other lenses to look at it is lens from an internal marketing team, lens from our service staff. For example, if I'm a service staff, how do how do I protect the service failure or sales failure? So even though we have been talking of 360 degree of customer view for many years, it has to be redefined now. So just to conclude on this customer centricity concept, we know that customer satisfaction and retention is key to the success in business. Studies by Harvard Business Review, Bain and Company, and Strategic Insight have found that increasing customer retention rates by just as little as 5% can have a huge impact, as much as 25%. Customer retention makes perfect business sense. The probability of converting an existing customer, and this is a known fact, that by upselling them a premium product or cross-selling them a new one is 60 to 70%. Conversely, to acquire a new prospect, we are looking at success rate of 5 to 20% in the best case. So the conversion of either existing or new customer brings us to the next interesting point. To understand overall customer experience with us, we have to start at the very beginning, right? We have to start by looking at the entire sales funnel and look at the dropouts. Obviously this is done even today. However, now we have tools and technology to dig deeper, know when exactly customer is falling out, how long are they at any particular point in their journey. For example, are they finding it too difficult to choose the right product? which may gives us several insights about our catalog and the presentation of that catalog. Or while they are waiting beyond a point, can we nudge them, say by a quick service chat call or a message? These are all possibilities now. Important point here is our ability to monitor the pipeline continuously, identify dropout rates, define ideal pass-through rates at different stages, get insights on why it is lower or higher than what we have defined, which should then help us to improve and continuously improve our overall customer experience as they pass through various stages in the application. So then it brings us to the next part of the message. How do we compete? What do we need to compete? And we have to start by looking at four key dimensions, starting with channel, omni-channel. So digital connectedness, where we have touch points with our consumer via branches, website, mobile apps, and partners. The partner channel is and will become more significant and important. We're already seeing some unique partnerships wherein different organizations are coming together, not just to share data, but with a very unique proposition that ultimately benefits the target customer by providing them great value in terms of offers, discounts, incentives, and basically a differential experience. The second important concept is product types. Now, this again is a very, very critical point. What we don't want is our ability to launch our digital experience, the first MVP in a very short time, which works great and customers adopt it, only to realize that they can't consume any more than one product. Imagine if that were to happen to your Netflix, where you only saw 10 to 12 movies in your interest category. In fact, here is an interesting experience from our early COVID 19 lockdown. Most of us had adopted digital and we were ordering our groceries via digital apps. But I'm sure most of us in early lockdown period, somewhere around April, May, faced difficulty in finding delivery time as there was a huge unexpected traffic. So we had no choice but to look for alternatives and move to other Me Too apps. So it was a huge opportunity for these Me Too apps to not only serve these new customers, but more importantly, to retain them. The question is, how many of them were able to do so? And how many of you moved back to your original favorite? In my case, Amazon Prime now. But why? There are a couple of lessons to be learned here. But the one or two more important is customer experience and product catalog. Most of these other apps didn't have that customer experience nor the availability of product catalog, even though they were taking the boxes in terms of having basic products, a shopping cart, a delivery channel. But simple things like uh, purchase your last shop your last purchase, right, gives you that ability to quickly order based on your history. So these are some very important learning points. Moving further to compete, we need continuous stream of prospects and consumers. And it is our ability to provide them with that unique experience to not only acquire, but to retain them. Now, let's just try to quickly summarize. The ultimate goal for us is to have a ideal portfolio. And what do we need to achieve that ideal portfolio? If we look at the funnel, and what are the various components that we need to achieve that or build that ideal portfolio? Starting with the customer experience that we have spoken of, I think, in a bit of detail. The second aspect is keeping fraudsters out. So there's a saying that the good customer will not go through a bad process. Bad customer will. The point here is no matter the opportunity of digital is not only open to the good customers, but it is open to a huge amount of fraudsters out there. So the digital journey has to ensure that we bring in the right amount of friction and balance it with the customer journey so as to ensure that our overall process keeps the fraudsters out. The third important aspect, and we will talk about it also later in the analytics section, is outpricing your competition. Now, when we talk of pricing, we have to again think of multiple dimensions: the right price, the right offer, and the frills that go around it. So it's not only the right pricing, but the various aspects around the offer and the benefits that depending on the segment of the customer. The next component is around keeping your funnel full. Given again the variety of channels that we have at our available to us now, including partnership, we have to and we have the ability to reach out to various customers and prospect, and hence we have to ensure that we bring in more and more prospects. Finally, the streamlined process, which brings closure to this section of the presentation. And with that, I will hand it over to my colleague, Ankit.
Thanks, Ashish. Very insightful in terms of how one should go about creating a good digital experience for the customer, especially from a platform perspective. How do you enable that using a single platform? As Ashish mentioned, one of the critical aspects while you're designing these experiences, these journeys, the products, and any decision that you're going to make on your customer, the analytics that powers these decisions behind the scenes is really key to how much hyper personalization you can enable on the platform for your end customers. As we all know, analytics is the key brain behind automation. But if we are specifically talking about the digital world, when we are talking about operating analytics at a large scale, we need to take into account a few other aspects which were unknown in the past when we were operating in the traditional world. So let's touch upon some of these aspects. As we are going more into the digital world, data is becoming one of the critical factors. We are now talking about handling large volumes of data at large velocities. And that is where one of the key challenges where a lot of organizations are having is their ability to create rich profiles, their ability to process that data at the right amount of time, their ability to understand deep patterns in that data and really extract the best value out of that. And the best way to enable that is to aspire to have and build rich customer profiles. So I'm going to talk about that concept a little bit more in details, that how do you go about building rich customer profiles to enable hyper personalization on the platform later on in a few slides. Now, once you have onboarded, you have ingested data onto the platform, created rich profiles, then comes the next step of really building your predictions. And not only just stopping at predictions, but also using AI and machine learning to prescribe the right action to the customers. What we have seen in the past, that there has been a lot of focus by organizations in terms of building the best in class predictive models. But one area which is heavily neglected is how do you take those predictions, combine them into a decision model, and really work towards the most optimal outcome from a customer as well as portfolio perspective. So that is one key aspect that one needs to look at while building and designing a decision management platform and using that to enable decision making for the customers. And most importantly, any use case that you're trying to solve, obviously we need to keep customer centricity into the mind. But while one is designing any analytical solution, we need to be cognizant of what are our primary objectives that we are solving for and really work towards designing a fit for purpose analytical solution. So let's bring some of these concepts to life with a few use cases. Let's start with the most basic use case, which is lending to a customer, be it an existing customer or a new customer. So let's take an example of Kate. She's a small business owner, and she also owns a pet and a pet supply store, and she's coming in to ask for more funding. She needs to build a website in the digital era. She wants to go digital in terms of reaching out to her customers. She wants to build websites. She wants to buy more inventory, and she wants to hire more staff to really look at growing her business. For that, she goes and approaches a traditional banker, Mr. Frank Solomon. He's really glad, he's excited to help Kate. But when he looks at Kate's profile from an underwriting perspective, he is using his traditional lens to go about the underwriting process. And what he finds is Kate is really a new customer with the bank. She's only 12 months on books. She only has a transaction account, which has a medium average balance. And as a part of the credit evaluation, he looks at her credit score, which comes out to be low to medium, which really prevents the bank from going about doing a straight through processing. But Kate really needs the loan. She provides additional information. There is a lot of manual processing involved. The turnaround time is increased. Ultimately, the loan is approved, but with a very poor customer experience. And really, that's something which we don't want to happen, especially in the digital world. So, what could we have done better? We could have possibly looked deeper into Kate's profile and maybe looked at it from a different lens. If we went about looking at all nooks and corners from the bank and even externally in terms of what information we can find on Kate, in terms of her transactions, in terms of his deposit account profile, maybe his online profile on platforms like Shopify, and so on and so forth, we really find that Kate is not that bad a customer. In fact, she's also associated with a lot of rich customers who are already on bank's books. For example, Sarah, who is her business partner, owns a joint account with Kate on the same bank's profile. And Sarah is also a premium reward card holder, and she owes a very high value home loan with the bank, which is really in great standing. If we look even further, we also find that Bob, who is Kate's life partner, is also a good account holder with the bank. So, if in the first place itself we had enabled our analytics to utilize all these additional information that's available with some additional effort, and we could have automated that process, we could have come back with the optimal limit assignment to Kate with straight through processing itself. So the key here or the learning here is essentially to go about finding the right type of information that you can gather for the customer to be able to build rich profiles so that you can improve your predictions and make the most optimal decision for the customer. If we drill a little bit deeper into this particular use case, the idea here would be if I'm trying to automate my credit analysis framework, especially from a business banking perspective, there are a lot of building blocks to solve that analytical and business problem. You're talking about estimating the earnings, the capital structure, cash flows, understanding the past performance, the capacity, and if there is any collateral associated with it. And a lot of these could be very, very hard problems to solve. But these are, although they are hard problems to solve, they're not impossible problems to solve. And this has actually been done, is being done in today's world, especially by the new age fintech lenders, where they're looking at things like income statement, balance sheet information, enabling direct API access into the platform from both model development as well as deployment perspective, having integrations to external data providers like Shopify, Xero, Square, PayPal to really understand the true business profile of the borrowers. They're also trying to understand the capacity or the affordability of the customer by looking at cash flow statements, especially if the customer is holding internal transaction data with the bank. So this is an area where a lot of work is happening today, whereby looking at savings accounts, credit card accounts, merchant transaction information, a lot of rich insights are being derived for a borrower, both from a willingness to pay as well as capacity to pay perspective. And for cases where this data is not available internally, in a lot of markets now, open banking APIs are available. And if not, they are being planned. And if not, there are a lot of external data aggregators that are helping to provide this information in a digital manner. So that's about automating the credit analysis framework. Let's switch gears and let's talk about once you have onboarded a customer, how you can drive more engagement. Engagement is a very key matrix from a digital lending as well as digital banking perspective. And one of the good ways to drive that engagement, again, I'll go back to the fact that you need to build rich customer profiles by looking at all the interactions that the customer is having with the organization or with the bank or with the lender. The idea is not just to look at performance information on the products that the customer is having, but also going much more deeper, much more granular in terms of transaction level information, communication information, and so on and so forth. So let's drill a little bit deeper into how would you drive more engagement from a customer perspective. As I said, in the traditional world, people are used to just utilizing cycle end information or summarized information and building models out of that. But in the new age, it's very, very important to create a richer profile by bringing in granular transaction level data as well as communication data, understanding how the customer is interacting with the organization. Using that information to classify the customer into various personas, which are multidimensional in nature, where we really try to understand the needs and wants of the customer, the lifestyle of the customer, and how he or she is using the specific product that we have sold to them. Not only use that historical information, but also update those profiles and keep those profiles up to date from a financial health perspective, relationship perspective, as well as customer behavior perspective. And when we are talking about or thinking about engagement and sending offers to the customer, it's not only just providing them the right financial incentives or incentivize them to spend more with the bank or deepen the relationship just from a product perspective, but also giving them informational offers which are related to their lifestyle. So I'll give you a couple of examples of this so that you really understand what I'm talking about. But even before you enable that right down to every individual level, there are benefits even at a segment and a portfolio level to solve some very trivial problems. And this is a real example that I'm showing here where we helped an organization to solve a churn problem that they were having on their DDA account. They were having a really hard time customers maintaining balances in their DDA accounts. And that's where when they looked at transaction data, communication data, cycle data, and married them with various predictions and models that they had built, they were really able to understand that the problem was very simplistic. There was a segment of portfolio which was really digitally savvy, but they were getting very poor experience when they were trying to contact the bank from a phone conversation perspective. So it's really going deeper into the profiles, making those profiles multi-dimensional, updating them, constantly updating them in real time so that you can make very, very precise decisions on the customers. So let's talk about hyper-personalization a little bit more and bring these profiles to life. Let's take a look at this customer, Naomi. When we look at all the transaction as well as communication information that we have on her, all the historical information, we find out that she's really a price sensitive customer. She's also tech savvy, she's transactor, so really trying to save money from that perspective. But she's also highly financially engaged with the bank. And by looking at Naomi's current profile, we figure out that, okay, she has a TD renewal that's coming up. So in terms of designing the right offers for her, we know that since she's very financially savvy, we should be sending offers which are financial in nature to her. So before, let's say, a few months of TD expiry, we would potentially send her an offer where we are giving her 15 basis point higher offer compared to what a competition may offer in the market. But along with that, we may also, just to drive more engagement, send her offers in terms of send her informational material in terms of market outlook from our internal economics team or the market research team. Contrasting it to another person who is Mario and looking at his profile, we figure out that he's really a high flyer. Looking at his transaction information from the DDA account, we figure out that he's really a high income customer, but he's also paying high rent. But interestingly, he's also a revolver because he really likes to spend more. He's brand savvy. We can call him a fashionista. And in terms of sending the types of offers, obviously we wouldn't want to send him a financial offer, what we sent to Naomi, which was doing a 15 basis point discount. He couldn't care less about it. For him, it's more about brand loyalty. So we may want to send him offers which are related to some luxurious merchants and so that we can incentivize him to spend more. We may also send him offers by incentivizing him on things like airline points because he cares about that. Let's look at one more profile, which is Mike, who is very, very similar to Naomi, but there is a very minor difference if you compare Mike with Naomi, that Mike is actually having a low financial engagement, but he's still price sensitive, he's tech savvy, he's transactor. So interestingly, the types of offers that we would want to send to Mike from an NPV or profitability perspective would be similar to Naomi, but we would potentially structure them differently. So rather than sending him a 15 basis point incentive, we would simplify the offer and we would potentially maybe send him a cashback offer, which he would appreciate much more than what we had sent to Naomi. In terms of more informational or engagement offers, rather than sending him market outlook information, we would really want to send him information around financial planning and maybe retirement planning, which he would appreciate much more. So the point really here is what we need to understand is the personas or the personalities of the person in various dimensions, and that can only be achieved if we stream through different types and variety of information that we can get hold for our customers. And when we are talking about sending offers or driving engagement, in case of Mike, let's say, for example, do we just stop at sending one offer? Is it really about just having a next best offer to the customer? Not really. It's about having a continuous conversation with Mike. So in today's world, when we are talking about digital engagement, we really need to be looking at having next best conversations with our customers. So for example, in this particular case, for Mike, we know that his time deposit or term deposit is maturing 19 days from today. And what we are really trying to do here is within our available budget, we are planning our conversation with him. So maybe 4 days from today, which is 15 days before the maturity date, we will send him an email offer where he can click to renew his TD. If he doesn't do that, 8 days out, we will send him a reminder to renew. In between, by studying his profile, we know that he would be really interested in an offer where we could send him a promotion to support our cause of fine arts. If he still doesn't renew the TD by then, we'll potentially try to send him an airline points offer. And then as we really close 1 day before the TD maturity, if he hasn't renewed it, we'll send him a last chance with really some high value offer to incentivize him to renew the TD. And that's something which we have designed, let's say a month in advance or 20 days in advance. But it's also not about planning something and sticking to it. It's also about reviewing it on a constant basis. So as the time passes, as more data streams through the platform and you understand more about the recent behavior of the customer, let's see in Mike's case, how does the offers change 2 weeks later? So what we have learned in the activities that we have done in the last 2 weeks is Mike actually responded well to the arts campaign that we sent him. So we know it reinforced our learning about Mike's personality, that he's really interested in those kind of campaigns or offers. But what has also happened at a portfolio level is the miles offers, the airline miles offers that we had sent out to a lot of customers, we have run out of budget on that because our forecast did not match. Our forecast for acceptance on those offers didn't really match in terms of what the expected outcome was. So we have exceeded the budget on that. And now we need to repivot and we need to think about what's the best offer to send Mike today, because we can't really afford to send him an airline points offer. So we basically re-optimize on the platform. And what we figure out now is that we could potentially send him another offer to promote the support of fine arts. So it's all about really continually monitoring your portfolio KPIs as well as the customer level profiles to figure out at that point in time what's the best possible offer or best possible conversation that you can do with the customers. To be able to enable that behind the scenes, it's not really that simplistic. One needs to break this problem down into various components and really think about how you're going to build persona scores, how you're going to measure and drive engagement. Also bring in the factors about predicting the churn probabilities, and then assessing based on the offers that you're trying to send to the customer using the engagement and the profiles, how you're going to impact those churn probabilities, and essentially drive more engagement. It's not just about doing it for every individual customer, but evaluating the impact of those and other KPIs at a portfolio level as well as segment level. And that's where you really need to have an integrated platform to solve all of these business problems. So to summarize, in essence, when we are talking about the analytical capabilities of a digital lending platform, we're really talking about 6 different pillars. From a data perspective, what we really need to have on the platform is the capability to ingest traditional as well as non-traditional information and really either be able to pull or push information from internal as well as external data providers. And the platform should be able to scale so that we can really create decision-ready customer profile stores. The way we think about data ingestion in today's world is very different from the traditional world, where when you are trying to make decisions, you can go out, pull all the historical information, and really summarize and aggregate that information at that point in time. That's no longer possible. And even if it's possible, it's really expensive to do that because the extent and the volume of data that we are looking at is huge. So one needs to really invest in having a decision-ready customer profile store on the platform so that these huge volumes and velocities of data can actually be utilized to their full extent. We also need to invest in terms of building not only AI and ML capabilities from a development perspective, but where a lot of organizations struggle today is to operationalize those models and execute those models in stream and in real time to make the best possible decision for the customer. And that's where you need to really invest in a platform that supports these capabilities. Further, to utilize these data as well as models from a next best engine and really able to use that information from a decision-making perspective in your decision engine across the life cycle. And finally, the ability to optimize and simulate each outcome in the offline environment or on the platform before you go out and productionize those decisions. And then finally, once you're operationalizing these strategies, you got to think about reusable assets or reusable microservices. So if I'm building an affordability or a categorization or an income expense profiling asset on the platform, I should be able to reuse it across the life cycle from marketing to origination to account management and collections. I should not be redesigning and spending effort again and again to solve that same problem individually for each of those use cases. And the best way to do that is operationalize that as a microservice on a platform. So I'll stop there, and both Aashish and I are happy to take if there are any questions.
Can you stop sharing? Yeah, there's the first question on how much data would a firm need to leverage data analytics effectively? Would a few thousand clients be sufficient?
So that's the most basic question that we get asked. See, if you are really talking about building analytics which is driven by sophisticated techniques of AI and machine learning, then obviously you're talking about a large enough population size or a sample set where a few thousand clients would not be sufficient. But one needs to keep in mind that to be able to solve a business problem from an analytical point of view, you don't need to necessarily leverage the most sophisticated technique available out there. There is still a lot of insight that you should be able to drive from your few thousand clients and work with the learnings that you or your partners have gathered in the past based on large population size and tailor it for your use case based on the limited learning that you have for your few thousand clients. So I would say that even if you have a few hundred data points, those are valuable in terms of designing any analytics for your specific use case. You don't necessarily need to have data points from millions of customers, But having said that, as you onboard more customers, or even for these few thousand clients, as you start to learn more over a period of time, you need to constantly keep on refining your analytics, because that is one of the key mantras with any analytical model or any prediction of sorts, that you need to continually refresh it, you need to continually monitor it, and you need to continually enrich it with any minuscule addition information that you would keep gathering over a period of time. Okay. So I think we have a second question here. What type of data can be used? So again, a good question. From the type of data, essentially what you got to look at is the business problem that you're trying to solve. Because you cannot really build an analytical asset which is fit for purpose for every business problem out there. So this question needs to be answered with respect to a specific business problem. So coming back to my presentation, I talked about a couple of business problems. So the most basic business problem that you have in the digital lending world is, how do you provide credit to your customers in the most seamless manner? And one of the key pillars of building analytics for that is evaluating the risk associated with it. And that is where, if let's say I'm trying to solve this from a business banking perspective, what you would want to understand is the financial health of that business. What you would also want to understand is, if somebody has lent to this customer in the past, what has been his repayment behavior? So what you would also want to understand is the affordability of the customer. So those are the three key data points from that perspective. If you're trying to drive digital engagement, what you need to understand is how the customer has responded to various offers in the past. What's the most effective channel for that customer? What is his lifestyle? What kind of offers he likes? So it really depends on the to harp on that point again, the type of business problem that you're trying to solve. And the best way to answer that question would be, from a common sense perspective, what your gut feel says that this type of data would actually provide me insights to solve that business problem.
There's a third question. Can we integrate persona-based features in FICO DMP to other tech stacks like Adobe, EMP? So I think it's a very interesting question. And if you recall, the microservices-based architecture or library of decision assets that I spoke of, the whole idea behind the platform is that these assets, reusable assets, a lot of them can be exposed as microservices, which can then be reused within the platform, or they can be exposed as solutions or microservices, including the profiles, answering the specific question, that can be used by other use cases outside the platform for marketing or for any other life cycle decision. Uh, Ankit, there is one more question on how many data point is good enough to have a rich customer profile.
So again, a very common question. See, from a data point perspective, and to answer that, maybe I'll take a slightly longer route. When we are talking about building a rich customer profile, what we are really trying to aspire is to build the multidimensional profile of the customer. The more dimensions that you can bring into the customer profile, the better or the richer the profile is going to be. But that doesn't necessarily mean that on day one you would have information on all of those different dimensions. So to start with, you can simply look at the communication data that you have gotten on those customers. Any transaction information that you have gotten on those customers for, let's say, last month or last couple of months, that should be good enough to start building that profile. The most important aspect is any additional information that you gather on a daily basis, you should keep feeding back so that that profile keeps getting richer and richer. So there is I would say there is no bad time to start building a customer profile. Obviously, you start building the customer profile from ground zero up, and even if you have very minimal data points on a customer, you start feeding those and you start building from there.
There's another question around, can we use FICO DMP for real-time decisioning around campaign management and scoring? So absolutely yes. I think all the decision assets that we talk of, and I think Ankit spoke of the base layer as data ingestion. So at FICO, we believe that the real time and the real time decisioning is the future. And even though we do support various types of data ingestion, real time streaming and real time trigger based decisioning is something which we are very bullish on, and platform absolutely supports it. Uh, there's another question around the cost of acquisition on digital lending and how is it different from traditional. So there are two aspects, and I think conscious of the time we have, this is probably the last question, Ankit, unless you pick up any other question you want to answer. I'll briefly answer by saying that from a cost of acquisition, we have to look at two aspects. One is that we are now moving broadly from in the traditional channel, broadly from a fixed cost model to a variable cost in digital lending, where with the advent of open APIs and all, you can determine how much cost that you want to, how much cost it will be for a good existing customer where you just make a call to two APIs versus 6 or 7 API call for a bad customer. I think we are out of time. So with that, I'll stop and thank you so much for attending the session today. For any other questions, please reach out to any one of us. Thank you.
Thanks, everyone. Bye.
Thank you so much for your insights into how and why digital banks are making better decisions with data analytics. Up next at 4:30 p.m, we are excited to welcome the session presented by gold sponsor of the Digital Banking Symposium, Gold Bell Financial Services, on the topic of the evolution of financing, rise of ecosystems. I will see you very soon. Do remember to click on the next session button located at the bottom of this page to join us there.